Yo, I'm Brendan, and today I want to show you Robinhood's recommended portfolios. This is a new feature that I just didn't even realize was around until recently, and it's pretty cool because Robinhood typically has this reputation of being like the place where you go to trade individual stocks. If you think GameStop is going to the moon, you probably think that way through Robinhood, and so the fact that they can give you kind of a recommended customized portfolio that's probably a lot more diverse than the way most people invest in Robinhood is a really cool thing. So I started with my IRA account, and then it gives me these options. How do I want to invest? Do I want to get a recommended portfolio from them, or do I want to pick my own stocks and ETFs? Obviously for today, we're going to look at the recommended portfolio. And because I looked at this once before, I do have kind of pre-filled answers, but you can still see the kind of answers that you'll fill in to get your own recommended portfolio if you want to do this. So I'll hit get started. And then these are the answers that I filled out in the past. They're not necessarily our exact answers right now, but as an experiment, we'll use these answers. So it asks for your yearly income. And all these are just ranges. So for me, I typically include both my wife and my income because it's not just my investing account, it's really both of our accounts. So if you put that together, we're actually under 100,000 now, but I'll put 100 to 200 just because it sounds nicer. You can input your investing experience. I would say I probably have a good amount of investing experience, if not a lot, because I've been doing it for like 15 years, but we'll say a good amount. I really don't know how that's going to weigh into their choice of what they're going to invest for you, but in any case, here's a very pertinent question. What's our main goal with the money that we're investing in this retirement account? So we can say, if we're just kind of cautious and we want to preserve it, this is often what people want to do whenever they're older or whenever they're getting closer to retirement. They're not necessarily as hungry for growth anymore. They want to preserve the money they've already made. So that's an option. Or you can have kind of a middle ground approach, or you can have it be medium risk level. Let's balance our kind of priorities of growth and also preserving the money. Or you can go grow as fast as you can, grow my money, you're the gingerbread man, which is what I'm going to do. And then for some reason, they ask you the total value of your cash and investments. You don't include your home in this. I don't know how this is pertinent whatsoever to the way that they're going to invest for you, but let's just pick a number, even though it's not accurate to us. Do you have other investments outside of Robinhood? Again, I don't know what this is going to do to inform their decision on how to invest for us. I'm guessing that they're just like farming for information. But yes, we have other investments, other places besides Robinhood. We're cheating on you, Robinhood. And then you can just estimate your planned retirement age. At this point, I don't know. I'm 37, got a lot of time left. I'm making less money than I ever have since my early 20s. So for right now, I'll put 60 in there. Ideally, I'd rather retire at like 50, but we'll see how this goes. Then this last question of risk tolerance is hugely impactful in terms of what Robinhood is going to choose to invest our money in. And it's kind of similar to the previous question that we did before about what's our goal for the money. Are we wanting to preserve it or grow it? It's very much in a similar line to that, but they give you more nuance here. There's 5 different questions to choose from. So for me, I still want the highest risk and the highest possible return just because that's kind of where I'm at in life. And I still have at least 15 years probably before I retire. So I got plenty of time to let it run. Highest risk it is. And of course, they give us a little disclaimer at the bottom. All investing involves risk, including loss of principal. Learn more about how they do their recommendations in their customer relationship summary and Reg BI disclosure, whatever that is. Well, I clicked into the Robinhood Financial Customer Relationship Survey because typically I like to dive into these terms and conditions for you and try and dig up anything that we might want to know that could influence our decision-making process. And it saves you some time because you're not reading all this legalese. The only thing I can find in here that's really interesting and pertinent to the current conversation, though, is this question of how do your financial professionals make money? Regardless of what anyone says, the way that we're compensated has conscious and subconscious effects on how we act. And so I think it's a pertinent question. It says that Robinhood financial professionals do not receive commissions or other compensation related to client assets or client investment activities. To me, that's huge and that's kind of surprising. What that means in layman's terms is if I decide to invest with Robinhood, the people that they have working for them that might pick this portfolio for me or otherwise would help me to do that don't make more money based on the amount of money that I bring them. Their pay structure isn't based on them convincing me to put more money into Robinhood or to trade more often. And so those are both really good things because if you were talked into putting a bunch of money in there or being talked into trading more often by some financial professional, that's not necessarily at your best interest. By the statistics, trading more often makes us make less money. But if somehow he got a bonus for making you trade more often, then that would be a real conflict of interest and that would suck for us. So it's really cool that they don't do that. And they do say, in limited circumstances, some employees may receive incentive compensation tied to the overall success of certain products, including portfolio recommendations and stock lending recommendation products. So it might be more of like a sign up 10 people for stock lending and you get a bonus this week, Bob, something like that. Not the best. Don't love that. Robinhood financial professionals receive salaries and bonuses that are based on their overall job responsibilities and performance. So overall, I'd say that structure is fairly confidence-inspiring. I don't love the implication that they might get bonuses and things for signing you up for stock lending because there are some negatives to stock lending. But overall, this is less squirmy than I thought it would be. All right, back to the task at hand, which is figuring out what this Robinhood portfolio would be. We'll hit submit. Let's see what they come up with. Ooh, let's dive into my results. Whoever these graphic designers are who make these little animated graphic things for Robinhood, they're pretty cute. Like, I get the gist of it. You're trying to take kind of a profile of me, algorithmically help me decide what I want to invest in and funnel that into this one portfolio that you're probably going to show me in some kind of round shape, like this is round, like a little pie chart. It's pretty well done. To meet your goal to retire at 60, you'll need a higher risk portfolio that works with your long time horizon. Well, we agree about that, and I did pick high risk. So that shouldn't be a surprise. It shouldn't be anything that I'm not already expecting, but let's find out what it is. My time horizon is 23 years. Since you have the time to ride out the market's ups and downs, you should go beyond saving to investing to maximize potential growth. Okay, this is an odd place for them to be promoting investing. Aren't we in an investing service right now? Why are they saying that I should be investing? We're talking about investing. It's weird. It's like if you went to a restaurant and the waiter was like, you know what you should do to keep yourself healthy? You should go eat some food. You're like, what am I here for, bro? I'm here to frickin' eat food. Anyway, my risk level is higher. I agree. My ideal split is all stocks. Okay, so I think if you had chosen something that was moderate or low risk, they might show you a split between stocks and bonds there. That's typically the kind of relationship that they show. And bonds are a tricky one. You know, I've read books and listened to people in the past who have promoted a kind of mix of stocks and bonds, and I'm just not a big fan of bonds anymore because I just feel like they're even slower growth than inflation is growing, and so it's like a net loss over time even if the account balance goes up a little bit. I'm just totally out of love with bonds right now. Hence my profile here. Hence the questions that I've answered for them are all towards growth because that's what I want. So you do you. I'm optimistic. I think that this stands to benefit me the most to do things this way, but you know, no promises for you or for the future. Aha! My recommended portfolio. So they have pieced together 7 ETFs for me and the proportion of each one. So this first one is IVV US large cap stocks. All that means is big companies. Large cap is a large capitalization. How big of a fish are they in this pond? Oh, and then they just also explained what large cap are right there. Wow, and then the next biggest portion after that is developed markets. That's interesting. So a big international focus. And the difference between developed markets and developing markets are developed are like industries in places that are well established. It's not like a new up and coming kind of situation. So they're saying the UK and Japan are examples, and they've got more advanced economies. I could just read you what the screen says here, of course. I'm trying to paraphrase myself, but I could just do this. Vong. That's a funny ticker symbol. These are US growth stocks. So thus far, I'm 55% US, 18% international. And then I've got emerging market stocks. So these are new industries or not as well-established industries. Then I've got smaller companies, momentum stocks. They've risen in value quickly over the last 12 months. This signals that investors are excited about them for some reason. Also, I could call them bandwagon stocks. And finally, US quality stocks. So these are companies that have demonstrated strong profitability and good financials. They tend to be more stable long-term investments. So it looks like our total is 26% international and only 74% domestic, which is typically more international focused than how I invest on my own. But I've also read some things that potentially the US growth can't keep up with what it's been in the past. And so without having a crystal ball, no one knows what can promote growth in the future. Will the US economy keep charging like it has been? I don't know. If so, this might not be the best portfolio. But if it slows down and the international companies do well, this could be great. When it says these percentages are fixed, so I'm not able to come in here and edit this and decide I want to turn down that international exposure at all. I'm stuck. Let's learn why. These percentages help make this portfolio tailored to you. Have you ever watched these videos on YouTube of a tailor like custom fitting someone for a suit? I feel like they're more satisfying than they should be because like I don't watch a video of someone, putting on socks in the morning, but somehow watching like a very professional British man in a beautiful suit shop get this tailored situation going for some other man just feels like proper and right and fun for some reason. Like, I wish I was getting a suit made because somehow it implies, I think, like status and prowess and a reason to have a suit made, like you're going to go do something important, and the whole thing just seems appealing. So tailored stocks, it's like a tailored suit for you. Based on my answers, they calculated these to help optimize my retirement portfolio's expected returns while taking on higher risk. So changing them can basically mess that up. Okay, interesting. So what happens if I invest in my portfolio now? I've got a whole $5.15 to invest. Let's go all in. Enter at least $20. Ah, come on. Well, let me do it. Okay, so I put in the minimum of 20 and now it's broken it down in actual dollar figures, the amount of money it's putting in each of these things. I'm gonna have to transfer some funds because I don't have enough money in Robinhood right now to do this, so I'll put $20 in there. We will hit submit, and bazinga, we have done it. We've contributed $14.85. We've earned 44 cents in an IRA match, and $15.29 is able to invest immediately. So now we'll hit continue. $20 going into the IRA in these new ways. And as easy as that, the order has been queued. I don't even remember what time the stock market closes, but I must be after the time now. So tomorrow morning, this is going to go through, and because they're matching your contributions to IRAs these days, if you're with Robinhood Gold, then I got a little bit of match earned too, which is nice. And future you says thanks. Cute. I think scheduling recurring investments is typically a really good idea. It takes that kind of cognitive weight off of your shoulders to have to decide, am I going to invest again? And how much am I going to do? And like somehow just budgeting that and figuring out, you know what? No BS. I'm going to invest this much money every month is generally, I think, a really good idea. For those of us that have very variable incomes though, like if you work on commission, if you're an entrepreneur like I am now, these kinds of things are a little bit difficult to commit to because you don't know how good of a month you're going to have. Maybe you make a lot of money this month and it would be no problem to invest. Maybe next month you don't make very much money at all, and doing this would actually put you under for the month. So for those of us that have that situation, I think we have to just manually schedule our own investments. But if you've got fairly constant living expenses and a constant income, great idea, in my opinion. And that's the Robinhood Recommended Portfolio. I think it's pretty compelling. I like that they make it easier for you. If anything, I wish that it was a little bit more front and center. Like I wish that they touted that a bit more to say, hey, we can figure this out for you. If you want us to give you input on what you're investing in, by all means, let us do that for you. But they only really brought up that offer when I was talking about funding my IRA. They don't mention that for your taxable brokerage account. So I'm guessing that it's not even an option for a taxable brokerage account in Robinhood. I think they should put that thing front and center, whether that's for your taxable brokerage or your IRA or whatever else. Give people the option. If they want to be hands-off, let them do it. I mean, M1 Finance is pretty popular for their pies. You can have like an expert pie that's just a pre-built portfolio for you. Acorns does a similar thing where they interview you, get some information on you based on your income and your risk level and your desire for what to do with the money, and then they do that for you. So I think Robinhood is sleeping on their own feature here. They should put this more front and center. I like it. Well, if you want to watch another Robinhood video, then here's one for you. Until next time, I'll see you guys tomorrow. The secret comment word for today is fuzzy. This little microphone is so fuzzy. Fuzzy Wuzzy was a bear. All right, see you guys. Bye.